Tokenizing real-world assets is one of the most compelling use cases in crypto right now. From real estate and private credit to collectibles and art, bringing traditionally illiquid assets on-chain has the potential to reshape how value moves. But building the infrastructure to make it work is no small task. Mimi Vong is taking it on. She's the co-founder and CEO of Metafyed, a platform that's using AI and blockchain to create a multi-chain marketplace for real-world assets, one that works for issuers, investors, and everyday users alike. Mimi, welcome to Token for Your Thoughts.
Thank you. Thank you. Thanks for having me.
Yeah, thanks for coming on the show. I'm looking forward to talking to you about all things RWA tokenization. But first, it would be great to hear a bit about you. You've moved from C-suite roles and brand growth leadership into blockchain. Can you tell us a bit about your background and
Sure.
what led you to make the jump into Web3?
There's a little secret about my career besides my digital transformations work. It's like my first internship. Internship is an investment bank for Wall Street firms. And so
Oh,
back
right.
then I experienced, the high power suits and all the hierarchy for Wall Street. But I think that because I went to school in California, so I actually got experience about the pace in Silicon Valley, the growth. So after I graduated, I actually started to work in technology companies. And throughout the whole journey, I got a lot of wonderful mentors and then the people that work with me. So I worked from like a digital marketing conference to working for Pepsi, headed the digital marketing to
Oh, wow.
Italian e-commerce company. So during this whole process, I was fascinated about how the digital transformations about our daily lives and then how does it change the way that we interact with people. But I also find out that we are so privileged, but that is not a lot of people can enjoy and understand about like the whole ecosystems until that I actually start to looking at the Santosha's, the Bitcoin's white paper. I think everyone read about that one. And I just find out that how does it structure the ecosystems, decentralizations, and then make more people more accessible, then I start to look into Web3. Then one of my old buddy and also my mentor, Alphonse, who is also co-founder for Metafyed. And so he actually introduced me to Web3. And then so I read like a stack of white paper as this much and
Oh, my
talk
gosh.
about that, how does blockchain works and then what kind of different companies. And so that's how I jumped from like working from corporates into Web3 space.
Okay, right. So did you jump straight into
No, I
founding
did a
Metafyed?
couple of startups, and then so after I work in corporates, and I moved back to Vancouver, and then I started doing some e-commerce consultings, and also have my own e-commerce business and agency business. So during this process, I started to learn a lot more about Web3. So about a couple of years ago, I really is basically all in Web3, and so we tried different projects from DeFi, NFT. We're seeing a lot of different growth from different ICO. And so you see the volatility for Web3, and then we experience all of that. So that's how we actually coming back to why do we start Metafy together? Because we find out that we are excited about the Web3 space, but at the same time that in order to drive mass adoptions, we find out that like tokenizations and RW is probably one of the best use case. And so that's how we started the company a couple of years, like about a year and a half ago.
Okay, yeah, makes sense. And what early challenges shaped your mindset as a founder in the RWA space?
I guess that in the beginning, even for myself, then I think that it took me a lot of time that is about the technology, that learning from different protocol and then like about the blockchains. And I actually took some courses in UBC in Vancouver, talking about is the Blockchain Summit Institutes. So I even started learning back programming my first smart contracts. And then so it's really
Oh,
that like it's
wow.
a full range of courses and give me like a really one-on-ones immediately. So that's how I started about like doing the blockchains. But really during that time, I just realized that it's not really the technology that really driving the difference because 80% whether people really want to get involved in projects is not, is really the trust. And so I find out that like education trust is actually making at least 80% of whether a project is prominent, successful, trustworthy or not. And the 20% is technology. And then also I think that in the last 10 years that technology has evolved in quite sophisticated and then like it's a lot of application as well. So I think this time right now we enter the second phase. How can we build more trust, mass adoptions and educations?
That's a really interesting stat and insights into that, like 80% trust.
That's how I
It's
see
kind of
it. But like
amazing.
maybe some people, I'm sure that some people just like from a tech backgrounds that they feel otherwise. But like for me, that I just feel that people really don't care about what chain and what technology you use behind. From a user point of view, even when I am starting my first wallets and everything, I just want to make sure that it works. My money is not, it's going to be there. No one is going to take
Yes.
away my money away. And then I don't care whether you use what blockchain. It's the same as that. I think that when you're looking for presentations, you don't care about whether people using a Window or Mac. It's really
Yeah,
about the presentations.
I
So
guess that's true. Yeah, I just heard about a study by Stanford, I believe, and they were talking about how most conversations are evaluative. And so, but, instead of sharing information, we're actually shaping perception, making judgment on things. And and then when you hear that, if you hear that enough, what people are saying, what people are sharing, it then becomes your reality, sort of whether it's actually true or not. So yeah, but it's interesting how like, yeah, the trust aspect is formed, and then just the power of perception and sort of how that trust is sort of
I think
earned.
trust is the most important. I mean, like, it's probably one of the most important things, especially in this generations that with AI, that they got so much content, and then you start to be really know the source and you need to validate. And so I think trust is probably the most valuable currency, I think.
Yeah, absolutely. So for someone new to real world asset tokenization, what is Metafyed and what problem are you solving?
Just to make it very simple, so I think that Metafy or like tokenizations, it's just another way for people to raise capital. In the existing world, we can use IPO, we can go to a bank, we can actually go into a crowdfunding platform. And then tokenizations is very similar to that, except that like when using blockchain, you actually make it more efficient and you can trading in 247s. And also you can make some illiquid assets to become more liquid. And so for example, previously that I saw a real estate piece or like a private project, unless I'm a high net worth individuals, I have $500,000 in the bank and spare cash, I can invest. Right now that you can basically frictionalize the investment projects and you can actually invest in 500, 1,000. And so we see a lot more democratizations about the investment opportunities. So from companies, it's very simple. Working with us, that will be something like fairly simple that you work with a bank that, you need to provide documentations. For our platform, we will also like kind of assess that what kind of reward assets you use to collateralize your projects, how much funding you want to do. I think that for what we do a little bit differently is that we will use the AI technology to assess the risk level at the same time that about what is the tokenomics models, and then we also using these ones to doing the compliance, and that was actually make it faster. But also that like from a investor's point of view, then they can actually just put the money on chain and then like they can actually invest is like much faster and easier. So I think that is something that it's another way for fundraisings. I don't think that we will completely replace IPO or bank, but at the same time that this is a great alternative of companies looking for investment opportunities.
Okay, brilliant. And what kind of assets is Metafyed targeting?
We are very focused on Asia Pacifics on private credits. Like for example, for companies that they already is having projects with some is profitable business, then they're looking for privatizing some part of the projects and then up to like 3 to 5 millions. So we are looking for something smaller. It's not as big as an IPO, which is like at the same time that like we also looking for companies that we do have a flexibility as well. But keep in mind that because we do actually need to work with a digital asset license exchange, that means that there is
Okay.
a listing fees as well, not as much as in New York Stock Exchange. But so people that like if you have such a small amount, it may not justify to using our platform. So we
Okay.
actually working very focused on private credits in the Asian market at this moment. We definitely want to expand and see different asset class. I think that US one of the most heard of and then like is really the treasury bonds. We see a lot of companies start to focus on this area for treasury bonds and then also
Okay.
treasury bills for tokenizations. Hong Kong governments actually just have a green bond as well. So everyone's target on different things, and then I think that like our sweet spot just happened to be private credits and for people in Asia.
Okay. Got it. And can you walk us through how someone might go about tokenizing, a private credit on your platform?
Yeah. So I think that usually that like we have companies from logistic companies, agricultural or AI projects. They're coming over and tell us that how much money that they want to raise.
Okay.
And then when they do that, and then we start to looking at their accounting books, and then like they will give us the documentations from the company's backgrounds, the audit informations, and then also like the project feasibilities or like the assets they use to back it up. And then once we
Okay.
do this one, then our platform, we're using that to analyze the data from a wide variety from both what the issuers give it to us and also from a macro data. I think that will facilitate at least 70% of we call like underwriting process. But at the same time that our team do needs to have a persons to know what is the reputations of that persons. And then like, so we do evaluate not 100% from AI. I think that you still need at least 30% really based on the humans factors to know about that person. Once we do this one, then we start to launch the projects in our platform. And then so sometimes we do we call whitelisting, but sometimes we just launch a project and say that in the next 2 to 3 weeks, then this is actually the subscriptions time. And before that, we were actually doing some public events called AMA. And then like we actually have the issues to have some AMA events with the potential investors. So investors
Nice.
can subscribe within this period. And then when the investments period start to kick in, then there is a period. So if this is a yield based, let's say it's a 35 days event, which is one of the projects we did, by the 35 days and then before that, all the investors will put in their money on the chains, and then like we will. Once we do this one, then once the investment project start, we give this back to the issuers, and then by the end of the projects, then the money is going to put it back to each of the investors' wallets, including the principals and the yield.
Okay.
Yep.
All right. Awesome.
Yeah.
And who's on the buy side of your marketplace? What kind of investor are you building for?
I think that at the beginning, the easiest low-hanging fruit is definitely the Web3 investors. So for example, if you experience buying any crypto, then you actually have the money locked in chain in EVM or in Binance or in your wallet. Then you just thought that, you know what? I mean, like their volatility every day can be up to 5-10% on a daily basis. But they may want to allocate maybe 10-20% of their money on the crypto into some assets with less volatility, but with it's pretty good yield and then like more stability. So I think that like at the beginning that we focus more on the Web3 investors, but as we move forward in the last 6 to 9 months, we find out that a lot of high net worth individuals and also like some other more savvy investors, they start to looking for ways to invest as well. So we've seen that like there are a lot more Web2 investors with more proactive and then like it's more savvy investors that they started doing this one. And our goal is actually that like it's going to be able to drive into up to everyone in investors that they can do that.
Okay, awesome. And what makes Metafyed different from other real world asset tokenization
I
projects?
think everyone has a different take in terms of what asset class, for example.
Okay.
Some asset class focus on like I mentioned before that like US is quite similar than they use treasury bonds, and some people focus on real estate. We are quite focused on some private credits and some project finance. So one of the projects that we did is is agricultural Southeast Asia projects. And then we also seen some projects from logistic for entertainment projects. And those are really in this Asia Pacific regions that based on our resources and relations. Another thing is because we already having the partnership with Digital Asset License Exchange in Asia, but we can actually markets globally basis. And we've seen that in Asia, that the retail investors, the adoption rate is even leapfrogging, is even higher than in North America, definitely more than in Canada. So
Oh, wow.
I guess that it coming back to a lot of investors in Southeast Asia or even in South America, then they want to de-risk the inflation risk, but also that they want to saying that like, how can they actually access some global assets that they don't have access before? So we've seen that like Vietnam is actually one of the highest growing crypto base in Southeast Asia as well. So
Amazing.
but of course, then like the ticket price may not be as high, but adoption rates that we can see that the growth rate is really high. So there's a balance. And then like, and also, for example, in Hong Kong and Singapore, which is where we have our strong foothold, and we see that like the governments have a very proactive and progressive regulations and then from stable coins and then in place. So we've seen that this is something that like we have a unique advantage. But at the same time that we're also looking for a lot of assets that we want to project for investors on a global basis. So I think that at the beginning, we want to make sure that we do really well on certain asset class and regions before we roll out on a global basis.
Okay. Yeah, that makes sense. So being region specific or asset class specific. And you mentioned expanding globally. Do you think it's something that, and do you think you'll expand to other asset classes in
I
the
would love
future?
to. I mean, like, I think having lived in North America for so long, then like I see that like the and also like with the recent administrations is a lot more proactive in terms of the policy. But I think at the same time that I think we just want to be one step at a time. And so like there are a lot of things
Totally.
that from building a strong team and then building a strong community, I think that that is something of our priority. The next step is definitely that like want to see expand different asset class. And then I think US is definitely that like one of the things that we would love to expand, but I think that like at the moment we want to make sure that we did it right. Everything runs smoothly, the platform runs smoothly, people can like actually start to invest. So that's something that we just want to do one step at a time.
Yeah, that seems like a good strategy. Just make it focused and working well rather than being what's the phrase like master of all trades and then no, I'm messing it up now. There's a saying, yeah, it's like master of none, jack of all trades, master of none. That's it.
I think we just can't spread ourselves too thin as well. And then like, like it's there's so many things going on and sometimes you just really need to cut some noises in the background and just really focus on building the product market feeds and then like, you know, asset class. And so there are a lot of things on that pipeline that we want to improve and optimize, and expanding globally definitely is something that we would like to see. And so.
And how did you arrive at focusing on private credit?
We try many different things. We tried different asset class before. We find that real estate is very easy for people to understand, but it's very hard to execute. And simply because when you're doing one of the asset class, one of the projects that we are exploring is that they are a really good asset class, but like the holding period is at least 5 to 7 years. And then like for the funds. And so my friends actually told me that, you know, this is a asset class that like you have a long period to doing this one. And so at the beginning that it's coming back to our first cohort or like the first target audience is really Web3 investors. I think Web3 investors do not have any horizons and patience more than 6 months. So, so like if you actually have a big difference in terms of like the asset class durations versus in the liquidity. Treasury bonds, I think that like, you know, is like you can it's a lot more liquid and then like so you can actually unlock it really fast. But the rate is not that high. So you can also see that like because the rate is not that high, then the adoptions, everyone is easy to understand. But like for us as a platform that we don't have much edge. Unless you're like a JP Morgan, you buy like a 20, 40 million funds in doing this underwriting it. So we find out that like from our experience, then we actually want to focus on something shorter period. But at the time that our investors will have a range of different risk level as well. So I think that it's
Okay.
depending on how big is your community size, what is the risk level, and then so I think it's when you do marketplace, you need to do both more issuers and also more investors. When you build the
Okay.
community together, then you can actually have a wide range. I think it's very similar that like when Amazon first built that they just really built selling books and then like they expand to different horizons. People start to have some
Yeah.
small tickets to wider tickets. I think any marketplace will have this experience and learning curve as well. And so do we.
Right.
Yeah.
Yeah, that makes sense. And what did you say the holding period is with
Right now that we
private
do it
credit?
from 3 to 6 months.
Okay.
So
And
it's
what
much shorter.
determines that? Is it just when you're likely to see a good return, or like why is it shorter?
Uh, I think that because I think that when you're looking at the cryptos and then like in the last 12 to 18 months, that it's really volatile a lot. And I think that a lot of investors want to make sure that they can exit their position fast so they can actually buy some more like lucrative like
Right.
classes. So
Yeah.
that is one of the driver then like they would like to do in like shorter period. And I think another thing is really that RW is really new. I mean, this industry and this asset class and tokenizing alternative investments is a very new concept. So for them that like they will start to wondering that like, can I trust this platform?
Totally.
Will they roll their sleeves and go away? So I think that that is a building trust and going back to like, would they trust me or like my partner or like would they trust Metafy? And that is something that we actually need to do our homework and to demonstrate that like we are here for the long run and then we are not really going to do roll the sleeves and we are just really going to be here for the long term.
Right.
Mm.
Yeah. So you recently expanded to Stellar via the
Mm.
Stellar Community Fund
Yes.
and launched a project with Nasdaq's.
Yes.
Why Stellar, and how does that change your platform's capabilities?
I think that we always believe in building in the multi-chains because like I think in the early conversations, no one really worry and think about that which protocol and which you use, but which one is more solid. And so I think it really coming down to which one is more scalable for us. I mean, like actually from a platform that like we talk to our CTO and then they say, you know what, from a multi-chains point of view, then like we start building off in EVM and then we start to expand. So when we expand, we're looking at see that what chains is able to have a more like scalability, more frictionless, and also like actually really the gas fees as well, and then the
Yeah.
transactions. And Stella actually is I think they have the background and then the history from really global payments. And then so that is that's some historical backgrounds from their DNA. And also I think that like you can see that they are like the people who use them, they're not really driving from a meme coin. I mean, like this is a
Okay.
really long term.
Yes.
We are definitely not in that category. And so like when we're looking for a chain to build on, we need to see that like our investors then kind of wallets and everything. So there's a combinations about our audience, about the infrastructures, and then like whether it complementaries to our existing systems. So Stella actually is quite complementary to our existing systems. And then like going forwards, we do looking for and see that like what chains that works. Some chains really good for for gaming. Some chains is really good for different things. And I think that Stella
Yeah.
would be a good complementary for us. The partnership of Nasdaq is because Nasdaq is the one that like has the digital asset license. And so we want to
Okay.
make sure that differentiate us from just really another blockchain like blockchain crowdfunding platform. We actually want to make sure that we are on a compliance direction. And that is
Nice.
something that like it's more painful because you got a lot more hurdles, but at the same time that
Yeah.
it build our credentials and the trust amount of community. So that's why that we partner with Nasdaq.
Oh, totally. Yeah, it sounds like a good choice and really complimentary. And yeah, nice to have that from the sort of compliance side
Yeah.
and building the trust, like you said. Talking on that front, regulation is always top of mind in
Yeah.
tokenized assets. And how are you navigating that as you build an accessible marketplace?
Um, we actually talked to a lot of lawyers. It's just like asking
Always good.
they're quite. I mean, like the suggestions. And I think that one of the good thing is because my co-founder, he's a lawyer by training before he actually
Oh,
start his own business. So he has been a very successful entrepreneur for many different ventures. Um, I think that like when we're looking at the compliance, then having that like our company is actually from Hong Kong and also in Asia, then Hong Kong government has been very proactive from building a sandbox for like different programs to having incubations programs like Cyberport and Science Park, and then to really opening up for a lot of Web3 companies. So we see, I mean, when I was in Vancouver, then I hear companies here that like they were actually attracted and want to see that if that is the right move, and then partnerships to be in Asia. So I think Singapore and Hong Kong in Asia has been very proactive and from a government point of view. We also seen that like Europe and also Dubai has been having their own regulations in place, and then of course U.S. just really announced the Gemini Act as well. We probably not able to tackle all the battles in all front, so like we probably just
yeah.
start up with somewhere, then like be able to do that. I think that compliance will definitely, it's something that core in our heart. Then we need to work with some partners, and we do have some legal partners to ongoing and see that the moving evolutions. Because I think that there's so many things going on. I think compliance is something that ongoing. So we're happy that like, Asia, especially Hong Kong and Asia, that like start to be looking with more clarity. And then like we can see that in the next 12 to 18 months, I mean, like globally, that will be having a lot more regulation in place. And then like, I think that would be helping everyone's to be developed this space.
Yeah, definitely. It must be nice building in an environment that's sort of fostering crypto
But it's really
adoption and
challenging.
growth.
It's like, it's kind of burning our head all the time. So like sometimes that like we cannot, I mean, there's a lot of, I won't say that all the regulations are clear. I will only say that in Asia it's more crypto friendly.
Yeah.
So it's not like they're 100% no, like having a clear path. I mean, like even everywhere, then like because they're more crypto friendly, so it's easier for us to be able to find help in that sense.
Right. Yes. Yeah. It must be nice building in an environment like that. It's nice that we're seeing some progress, in the US. But yeah, it sounds very different to sort of the regulation just by enforcement
Yes,
environment
for
that's
sure.
been in the US for the last, 4 years. So yeah, I bet that's nice at least. But like you said, it's a lot, I'm sure, to keep up with and to keep track of everything. So Metafyed is AI driven. You've spoken a bit about how you use AI partly for underwriting and a few other areas. Can you talk us through a bit more about that
Sure.
and what the role AI is playing?
I would always think that AI is just going to be a co-pilot per se. That means that like we will not really rely on like the informations at least in this moment, because I think that at the same time that right now for any projects we bring on board is almost either Elvin or myself, then we actually personally invest in those projects and we know
Okay.
those people's like really well. So that's something that we are very careful about, because at the end of the day, then a lot of people talk to me and say, you know what, those projects, whether they do well or not is their problems because you already did all the work. But I think that at the same time that like whatever, especially we are really in the early stage of the business, any times that whenever there's any big problems happening in our platform, it's going to be our reputations.
Yeah.
So that's why that I think in the first year and then the projects, we will be extra careful. We will rather bring in more quality projects than really just bringing the mass. AI is going to helping us from vetting those projects, fulfilling the compliance, because I think that like all the license exchange will have different compliance issues, and so like they will helping us from a compliance point of view. I think that like we do have our team members that's to be having that the human touch to looking at that whether is the project makes sense or not. And so I think that they will help us to be more efficient. But I think that the final call is still really our team.
Yeah, that makes sense. And What do you think is some of the biggest misconceptions about the BRWA tokenization space?
I guess that it's not just RWA, but in general, that even my parents ask me, what do I do? So I think that the first thing that people just thought about RWA in blockchains that they just thought is really just Bitcoin. And I think that
Okay.
I think one of the biggest misconception is that RWA, I think that is still really early, but like why it's called RWA is because it's actually is asset backed. And I think that's really a major difference compared to what happens in the ICO days. And then I think that you saw that in ICO days that you saw people, just having a white paper that they can raise a couple millions. And then it's not going to
Yeah.
happen anymore.
Mm-hmm.
And also I think one of the things I always told people that, we are not going to be 100x to the moon in 1 week. And so like, please do not expect this one. And then because at the end of the day, the projects that we have, they do have reward asset back. That means that they
Mm-hmm.
already have valuations.
Mm-hmm.
But because it's a private credits or alternative investments, so relatively speaking, they have high risk but also high return. But that doesn't make them to
Ah.
have a projections to having that
Mm-hmm.
100x. It's not. So I think that people have to having the expectations from both the investor side and also the issuer side. And then I think some issuers will some people projects are coming over and say, I heard that it's very easy to raise money. So like, can I just dump you the whole thing and then you just did everything for us? So again, that
Ah.
is no again, because you need to have your trust built and your community base as well. Because right now that you're talking about, you're not just asking a couple investors to back you up. You can just
Mm-hmm.
maybe have one or two VCs buy you, and then they can underwrite the whole project. You're talking about at least couple hundred people backing you. That means
Yeah.
that like you have to have a sizable community and the trust followers, and then you have to have your own reputation. So there are quite confusions and then misconceptions. The start is easier and it's getting more efficient, but you still need to do the homework and don't fantasize about that 100x anymore.
Yeah.
I just keep reminding people about that. So
Yeah. I bet that's, a bit different because I'm sure people hear that all the time. Like, yeah, we're going to the moon and,
yeah,
you'll
the
get
moon
100x for
is
showing up and not saying that.
yeah.
People are like, oh, really?
Yeah.
But it's nice to manage the expectation and to be real about it.
Yeah.
And so a lot of our listeners are fellow founders building in the space. So I always like to ask a bit about, your experience building in Web3. Is there a mistake you made, early on or a learning that you had that you would like to share for other people, building in tokenization?
Um, I I guess that hiring is like finding good talent is very difficult, and I think that is in every space. Um, I personally just find out that with AI, then like you start to make a even more difference than like the mediocre versus the really good one. The really good
Okay.
one, then like it's really hard to find, but they are when the really good one coming over, then they will not just give you the code from AI, that they can know what is the difference and build it. Um, I think that hiring is actually one of the key things that you need to focus on, especially on early on, because I think with the whole Web3 is even more changes. It's like there is the landscape is even changing even faster, 10, 15 times more than like even in the internet space. That means that the team that you work with, that they have to be flexible, and then they have to be humble, that they are okay to accept that they make mistakes, but also that they have to be very agile. I guess it is any industry that is always hard to find those people.
Yeah.
It's not just Web3. I think that that's really from entrepreneur experience, but also like I think one of the key difference is like I used to work in big corporations, and then like from switching from big corporations, even from a C-suite to doing a startup, then you realize that your resources is much less than before. That means that you need to roll up your sleeves more, and you need to be more uh you cannot just supervise. You have to do your own
Right.
as well.
Yeah.
And then so I think that like that's something that you need to have that mentality, that like you don't expect that you supervise, because like no one is going to supervise you, and then like
Yeah.
you are to be able to supervise people, and you need to roll up your sleeves. Um, and I think that another things that I feel that a lot of people are missing, not just really from Web3, but I think all entrepreneurs need to start to think about building their own personal brand. Personal brand, as if that like, for example, for you then, like Lindsay, that when I think of you, I know that like it's a very polished, sophisticated person, no PR, but also like able to digest information in the Web3 space. So this is the three things that I remember. So I think
Oh.
a lot of people then when they coming over, that they need to start to have their thought leaderships, sharing that their personal brandings, who they really are. And I think that you cannot rely on your company to building for you. Everyone is really as a media house themselves. And that is something, the personal branding, I think everyone needs to think about as an entrepreneur, as a Web3 investors, or like as a Web3 entrepreneur as well.
Yeah, that's a really great point. I think founder-led marketing can be so powerful now, and yeah, can do a lot in
A lot
shaping
more.
perception,
Exactly.
and then also like on the growing and scaling a business, it can be really powerful, for
Yes.
that. So yeah, that's a really good point. Thank you for sharing that.
Yeah.
Is there anything that has surprised you about building or scaling in this place? You already mentioned like the shift going from corporate to, being an entrepreneur and having to roll your sleeves up a bit more. But
Mhm.
anything else that was surprising
Uh,
in this industry, moving?
I guess that like for me, I actually find out that the AI technology changing my work a lot more than like it's integrating Web3. So Web3 for me, that I find it really decentralized and make everyone's with fair shots. And I think that is fascinating, because when I was working in digital marketing, then I seen that a lot of existing social media can be really skewed for certain narratives. Like I'm sure that like some of the people that I hire, or like you and me, and then like our feed will be completely different. And but at the same time, so that's why that I just find out that like it's sometimes that our learning about the world is really dictated by like some social media and centralized organizations. And I think that like for
Right.
Web3 is actually something that you need to learn, do your homework, and then like it's a lot more um everyone is relatively more equal, and everyone has a different fair chance. And so I think that that is something. I mean, like I think that one of the most easy example is that when I'm going to conference back then, that when I went to a conference, then you will see that whether that person is a keynote speaker, and it's really hard to be like, on the stage. And there is certain kind of hidden hierarchy. You're never able to reach
Yeah.
that. But I think that like when you and I in a Web3 conference, everyone is a lot more accessible. You can talk to the person next to it, and then like you can just chit chat and get to know each other. And you find out that that person is a big shot, but they're really a lot more easygoing and humble. So I think that that is a very different, the Web3 space. So that also means that like in the Web3 space, you cannot really just rely on your company's glamour. You actually have to be the persons to advocate for yourself. And then
Yeah.
so you actually need to be more not really grassroots, but I think it's you actually have to peel up and just to be who you really are. And people always talk about being authentic. I just think that it's not just authentic, but just they really want to know who you are, and then that will shine through. Then just really that your company, no one's even exchanged business card these days, so there's
Oh,
nothing
I know, right?
there's nothing you can brag about from a business cards, and then so the only thing is really that who you really are. So
Yeah, I love that outlook for the Web3 space and things just being
yeah,
a bit more decentralized and equal on like many fronts.
yeah.
So looking ahead, is there anything that you're working on in particular this year that you're excited about, or anything that we should, keep a lookout
We
for?
we are still building on Stella, but also like I think that we actually definitely want to build more the community and trust. I think that on a personal fronts that I would like to see more female in this space. It's like I think that like that's
Yep.
something that we always want to see that in the Web3 space, but it's not just really that, but it's more people know about what is Web3. And I think that like it's not about just punk kids with hoodie. and then and having
Yes.
100x, but it actually is like something that is relates to every one of us, and then in the financial systems, capital markets, and I think that's something that I would like to let more people know about that. I think that for Q3, Q4 definitely is a really busy seasons for all the crypto and then and Web3 people, especially from different events going on in Asia, and then and also so something I'm looking forward to, and then just to connect more people like you, and I'm really happy that we met in consensus actually. Yeah,
Yeah, no, it was fantastic to meet
yeah,
you there. It was such a great event.
it is.
And yeah, talking about real world, all things real
Oh,
world. It's
yes,
amazing
yes.
meeting people, in person in the real world. Yes, and a lot of more great events coming up. What trends, whether it's tech or regulatory or market, are you watching right now that you think will shape the next wave of RWA adoption?
I would see that asset management, because a lot more people start to ask me that whether we are compliant on certain regulations and asset management, and then but also I'm thinking that from AI in terms of cybersecurity as well. So because
Oh,
I've
yes.
seen that, I think that that is some space, not necessarily Web3 specific, but I think that the cybersecurity and then it's that is something that is so easy. Then it's, I think even some of our developers, they got hacked in their wallets, and then it's
Oh,
so easily happening. And I think that with the AI, that it's much easier. I mean, one of my lawyer friends also say that suddenly got someone to throw some money. So I would see that this is a big trend, the AI, not just really make ourselves more efficient, but also how can we integrate the cybersecurity, make it more better for everyone's. I think that the biggest factor that we will see this year is really the pull factor. How does the investor see that the whole crypto market? And I think it really coming down to educations, and also what kind of projects that they find is really useful. It's gonna be probably the conversions, but there's it's the market is still, I mean, it's more positive in US, but I think that with the global macro environment is still very volatile.
oh gosh, I know.
So so that is that part that I guess you never really figured it out. And so we can only feel what we can do. And then that's
Yes.
from a macro point of view. And then we just people is still, asset class is still not going to go away. And then I think that you got a lot more governments or companies start to using Bitcoin as a reserve. So we
Yes.
see that the changes as well for sure. Uh, we probably need to more educations, and then and also seeing that what asset class really makes sense. And I think that that will be helpful. Yeah, I think that that's how I see what's going to happen in the next 6 to 12 months. I cannot see
All
anything
right.
further, because I think when I'm talking with you that there's still not as many things going on in the world.
Oh, I
Probably
know.
a nuclear war. So I think
So
that
much happening.
I know. So
Yeah. It's positive and then
I
just
know, I know.
such a roller coaster
It
still with
is, it is.
everything.
Yeah.
Well, okay. Is there anything else you'd like to cover before we wrap up? I feel like we've
I think
gone
that
through a lot.
we quite cover quite a lot. I think that um I see that it's still learning a lot, but I think that it's coming back to your point that besides the Web3, then and besides the AI, one personal takeaway that I just thought is really that the human connections community, and then those I just find out that is never being replaced by efficiency. I mean,
Yes.
so that is something I find out, and especially for entrepreneurs and then for startups owners, that they probably they should step out of their comfort zones, really got to talk to more people. And then I think I learned more about new things, and then meeting couple people for conversations in a conference sometimes, and then carry on, than if you're just going to be reading some blogs and then using some news and all that. So I think that people probably needs to keep in mind, and there's something that never replaced the person's human connections and then the interactions. And then so that is something that I looking for, and seeing that how can I even myself do better? Because sometimes it's kind of easy just wearing your pajamas and then working at home. But I think that for
Yeah.
this generations, that we need to keep in mind that we need to have a balance as well.
Yeah, I think that's a great message because AI is so great for making things more efficient and saving time. But, that's then translated into you hearing about companies, well, we're going to, have less people because of AI. And I think that is an important message that actually having, real world interactions and connecting with people is still really important and has a place, and it can be the source of a lot of inspiration, like even motivation. I've definitely gone through periods where I've spent way too much time in the house because I work remotely, and you can do everything remotely. I have a remote team, and I definitely I went to Consensus. Obviously, that's where we met, and I did a few other events in the same month, and I felt so energized after it. I
100%.
learned so much.
Yep.
Had great conversations, but also just felt really energized and motivated, and that's something that I don't get when I'm talking to AI every day. So I love that message, and I think that's really good advice for founders as well and entrepreneurs.
Yeah, I'm actually excited about that. For especially in the upcoming events as well. And so,
Definitely. Amazing. Well, thank you so much for coming on the show. It's been really interesting hearing about Metafyed and a bit more into the RWA and tokenization space. It's a really amazing, incredible use case for crypto. So it's been awesome learning more about it. And so thanks for coming on the show.
Thanks for having me. Thank you, Lindsey.
Yeah. And where can people go to learn more about Metafyed?
It's just metafyed.com. metafyed.com, and then we have presence in X, in LinkedIn, and then and for myself, it's really that my name is Mimi Vong, and then in either LinkedIn or X as well. So,
okay, wonderful, and I'll make sure to link all of those in the show notes so people can find the details there.
Thank you so much. All right. Thank you.
Thank you, Mimi.
All right.
Okay, so that's it for today's episode of Token for Your Thoughts. If you enjoyed the conversation, be sure to subscribe and follow the podcast for more insights from the leaders shaping the future of crypto and Web3. We'll see you on the next episode.